Time now for business. We turn to Kate Moody. Kate, we've just gotten word in the coming minutes we should be hearing from Boris Johnson, the UK Prime Minister.
Well, everyone will be bracing to hear what he has to say, of course, the currency markets in particular, Francois, because they have had a fairly rocky session already this Monday amid great uncertainty about what is next in store for the British government. You can see that live shot of Downing Street as we wait for the Prime Minister to come up. Another major factor that's been taken into account this Monday is manufacturing data for the month of August. It shows factories' production dropping at its sharpest rate in 7 years in the UK. The IHS Market PMI report suggests that European customers are moving away from UK-based companies ahead of that October 31st Brexit deadline. Business confidence also fell to a record low. Now, all that contributing to a rather volatile session on the currency markets. The pound dropping as much as 1% against the US dollar earlier on. It's trading at about $1.2061 there, €1.09. It is worth saying that the euro is also dropping against the dollar, part of the knock-on effect of the latest escalation of the US-China trade war. Well, for more, we can cross to London and speak to Elsa Lignos from RBC Capital Markets. Thanks for being with us. How worrying is that manufacturing slowdown that's been confirmed today in the UK?
It's certainly not good news, although there's a broader manufacturing slowdown happening worldwide. And if you look at the way sterling's been trading, it's actually been following the political news much more than the economic news at the moment.
Well, in August, we saw the pound falling to its lowest level against the euro in over a decade. Are we headed still lower, would you say?
So at the moment, markets are currently pricing roughly 40% of a no-deal Brexit. We use bookmakers' odds as the best and actually only proxy we have for it. And it's really a very uncertain situation. We were actually just having a conversation here on the trading floor, and a wide range of opinions, with some people thinking a no-deal Brexit is extremely likely on October 31st, and others still thinking there is some chance of a last-gasp deal. The other bit of news we've heard today, of course, is that the UK government is thinking of potentially calling a snap election, or if we do get the rebels in Parliament winning the vote this week, potentially refusing to implement the result of that, and therefore almost forcing an early election. So there's a lot of political uncertainty that makes sterling particularly difficult to trade at the moment.
How would a snap election play out on the markets?
Again, a wide range of views. It's really interesting because typically markets have a fairly strong feeling for what they think is positive or negative. And again, just discussing it with clients and our traders earlier today, some argue it's uncertainty and markets don't like uncertainty. And some others, and myself included in this, say, well, actually, no-deal Brexit is kind of the worst case scenario for sterling. We know that's a possibility. A snap election might actually open the way to some more sterling positive outcomes. So I'm not that certain it would be as negative as some out there fear.
So the general consensus is that no-deal Brexit is still the worst-case scenario for businesses and investors alike?
Absolutely, and I think more than anything because it brings so much uncertainty after October 31st. You know, I've heard some people say, well, at least let's get it over and done with so we can move on. And that, I think, is a bit of a fallacy because November 1st doesn't bring any clarity. The EU has also made it very clear that if the UK wanted to return to the negotiation table after a no-deal Brexit, they would have to rediscuss the same things that have been sticking points all along, the Irish backstop, as well as the divorce bill and, of course, citizens' rights. So I don't think that there is any kind of clarity that comes with a no-deal Brexit. And it crystallizes a lot of the economic risks that we've been discussing.
All right, lots more questions to come then in the coming hours, days and months. Elsa Lignos, thanks for joining us on France 24.
Thank you.
Well, we've just got time for a quick check on the day's trading action now. The weak pound has seen the FTSE 100 rising about 1% because so many of the companies that trade in London actually make their money elsewhere. So a weaker pound actually means higher profits for them. The CAC 40 and DAX with a more modest finish there. Wall Street is closed for Labor Day. Francois?
Many thanks for that, Kate Moody.